All right, so the market resumed its sell-off today with the Nasdaq down another 77 basis points. It seems like just recently the markets have started to struggle a little bit. I mean, we were going up every single day, setting new record highs basically every day up until, I don't know, the last week or so. And really since the beginning of March, I would say, that's when we started to struggle a little bit with moving higher in the stock market. And I actually think that this is going to continue for a little bit. And I think a short-term correction will actually be most bullish for the long term. If we don't get a correction, I get really concerned about the long term because I worry that we're going to enter a melt-up phase and a bubble, and melt-ups lead to meltdowns and bubbles always pop. Really quickly, if you are new here or returning and not yet subscribed, please subscribe down below. I just hit 30,000 subscribers 2 days ago, and I'm already up to basically 30 and a half. So my channel's been growing like crazy thanks to this amazing community, you guys watching the video. I greatly appreciate it. I don't want to waste any more of your time, though. Let's go ahead and get into this. So maybe you are new to this channel, and you're wondering why in the world would you listen to this random guy? I mean, this guy looks like he's 22 years old, and I am 22 for another couple months, and it's a valid point. And maybe you shouldn't listen to me, and maybe you shouldn't listen to other YouTubers. I just want to bounce my opinions and my thoughts off of you. But it is pretty interesting. You know, 7 days ago, I made a video. The stock market crash has begun. Not a very popular video. Lots of people hit the dislike button, and especially a year ago, I guess it was, stocks just bottomed. I made this video, Time to Buy. This is my most disliked video I've ever done, and I published it, let's see, pause the video. I published it on October 6th of 2022. I'm pretty sure the market's bottomed on like October 11th or 12th. So if there's one thing I got right in my life, it was calling that bottom. I'm not guaranteeing you I'm going to be right this time, which again, I'm not a financial advisor. I'm just a 22-year-old that's nerdy enough about the stock market to have a YouTube channel that talks about it all the time. And I actually just went to the analytics of this video just for fun. 89.5% like to dislike ratio, which is extremely low. You'll see my channel average is 97%, which, by the way, I don't ask for likes that often, but like the video for me. It helps me out tremendously. But you can just kind of see, and this is a really fun gauge for me. Whenever I make videos about the macroeconomy and the stock market as a whole and my views on the direction of the stock market, usually if more people disagree with my thesis, it makes me even more confident in my thesis. And that's because of what we call contrarian indicators. But again, even this most recent time where I've started to call the top, at least the short-term top, nobody wants to hear about it. I even posted on X, which my X page has been growing like crazy too. I said week-to-date performance of the mega cap 8 names. The rally is getting narrower. This is typically indicative of a buying climax. Will this time be different? This post got 2 retweets and 6 likes. That is nothing for me. And, you know, again, people ignore this because they don't want to hear it. They just want to talk about how stocks are going to keep going higher and higher and higher and higher. Eventually, that has to change. Eventually, things have to cool off, and I think that's the time period we're entering right now. You know, a week ago, whenever I posted this, March 7th, the only mega cap name that was green was Nvidia, and it was moving parabolically while every other mega cap name was red. So let's talk about Nvidia, and they actually have an upcoming catalyst that I think could mark another buying climax for the stock. This big NVIDIA AI conference, NVIDIA GTC, Global Artificial Intelligence Conference for developers that bring together developers, engineers, researchers, inventors, and IT professionals. Topics focus on AI, computer graphics, data science, machine learning, and autonomous machines. This is a huge conference, and there are many, many attendants in the AI space that are going to be speaking about new products and new services that are based on AI, and they'll be launching these services and these products at this conference. This takes place next week from March 18th through the 21st, so it's actually a 3-day event, but I'm going to be watching the markets really closely to see how they respond to this conference. What I think is likely to happen, just because if we go to Nvidia stock really quick, Nvidia has actually shaved off 6.5% from its all-time highs. And as a result of that, I actually do think that this conference is going to lead to some short-term buying, but I think it's going to quickly turn into a sell the news event, where people take their profits because the news has been released. But I'll show you the real problem with Nvidia. And the reason its stock price has gone up has been completely legitimate. Analysts were very wrong about their projections for the company. So, back in, a year ago, if you looked at Nvidia stock, you would think this is trading really expensive. In fact, I'll show you it. So in July of last year, Nvidia's forward PE multiple was a 62. And people thought that was really expensive. But analysts had their numbers way wrong, and how could you blame them? Nobody knew that this AI craze would just come out of nowhere. But despite Nvidia's stock price absolutely skyrocketing, their forward PE multiple has come down to a 37 currently. This is because analysts have revised their forward earnings projections for Nvidia, and it makes sense. But you've actually seen the multiple and the valuation come down despite the stock price absolutely soaring. But eventually this is going to change, where analysts will have caught up and they will have written their wrong, I guess you could say. You can see that since 2023, analysts have been increasing their forward revenue estimations for Nvidia like crazy. I mean, this is almost a straight vertical line. That's how crazy this is. And that's just their revenues. Look at their operating earnings per share and how these have gone up, how these analyst estimations have gone up. And I'm sure my camera's covering this. I'll zoom out. Look at how quickly these estimations have gone up for Nvidia. And at some point again, these earnings estimations will have caught up. You can even look at the forward profit margin. And it shows the same exact thing. I mean, it's the same story over and over. I don't need to show you all these valuation charts and these forward estimations for the company, but you get the point. Eventually this changes. Eventually the demand for Nvidia is going to slow back down and the supply is going to catch back up to all this huge surge in demand for their products. And the semiconductor space has been notorious in the past with these cycles where there's all of a sudden a huge craze for Nvidia's products and these semiconductor products. But the companies that order from these companies like Nvidia double or triple order because they worry that they're not going to be able to get their hands on enough chips. And then all of a sudden, Nvidia and these other producers catch back up with their supply, and these companies that double and triple ordered may not actually need all those chips, and they'll resell those chips. So this is a very cyclical business. Don't get caught up in the fact that Nvidia has gone up in a straight line. It's going to cool off, and it's already started to. Do I think Nvidia is going to be a good investment long term? Absolutely, as long as it doesn't turn into a bubble. And that's what I'm worried about. But if we do get this correction that I think we're going to get, it leads me to remain bullish for the next 12 plus months in the stock market. And although I'm short-term bearish, this is another reason I'm actually long-term bullish. It's because this rally, you hear on CNBC or other YouTubers talk about it. I'm sure I've even said it in the past, that this is a narrow rally and it doesn't have legs unless it broadens out. And that's just plain incorrect. So if I've said that in the past, I was wrong. And anybody you hear say that is also wrong, because look at this performance. These are different market indices. There's a mixture of small caps, mid caps, large caps, mega caps, different sectors in our economy, value stocks, dividend plays, growth stocks. All of it, other than the Dow 15 utilities, has had really good return since October 12th of 2022. Obviously, the best performer has been the NASDAQ 100, so those are the biggest tech companies. We all know that. But this actually gives me more confidence in this bull rally sustaining itself even longer. We're already at a 20-month bull market at this point, which is actually pretty long for a bull market, but I think it could go on a lot longer. And it's because there's room for this rally to expand to these laggards. And again, it's not like these laggards have performed poorly. They've performed on average. I expect that these laggards are going to catch back up to the mega cap companies, the NASDAQ 100. And even if the NASDAQ 100 cools off or even reverts to the mean, our stock market is going to keep going up long term. And another thing we can look at to really prove this fact is the fact that the equal weighted S&P 500 index just recently set a new record high. The market cap weighted index set a new record high at the end of 2023, beginning of 2024, I think it was. And just now in March, the equally weighted S&P 500 index set a new record high. So clearly it's lagged. It hasn't performed poorly, but there is room here for this market rally to broaden and expand, which obviously means there's more room for the bull market to continue. And we can also look at small caps, whether it's the Russell 2000 price index, which is the red line, or the S&P 600 price index, which is the blue line. These are both small cap indexes. You can see compared to the S&P 400, which is at all-time highs, the small caps are still sitting far below their previous all-time highs that they set at the end of 2021. Again, if this rally continues to funnel down, small caps are going to start to outperform, which means the bull market is going to continue. And honestly, I think the bull market is going to continue until the mid caps and the small caps and the laggards do catch up and set new all-time highs and go pretty far past those all-time highs. But let's revisit why I'm short-term bearish. I'm long-term bullish, but only if we get a short-term correction or cool off in the stock market. And it all has to do with what I talked about at the beginning of this video. Late 2022, October 6th, when I posted that video, it felt like I was the only bull in all of financial media. And that actually might be true because the level of bearishness we saw at the end of 2022 was the most bearishness we had seen since the great financial crisis. But now this is flipped on its head. The bull to bear ratio as of March 12th sits at 4.2. There are 4.2 bulls for every bear. And this is the highest reading since December 29th of 2017, which was when we reached a really, really big level of euphoria of over 5. And we can also look at the Investors Intelligence bull versus bears percentage. This is just another measure of the bull to bear ratio, essentially, where currently 60.9% of people, and I actually think this is low, are bullish. I'm actually going to rephrase that and say I know this is wrong because you look everywhere out there and everybody is bullish. Everybody. Far more than 60.9% of investors are bullish right now. But perhaps what's even more crazy, and I'll zoom out to make sure I'm not covering this up with my camera, is 14.5% of investors are bearish. This is extremely low. And it's actually the lowest since February 27th of 2018 is what I have written in my notes. Absolutely crazy. Very few people are bearish right now. And again, thinking as a contrarian, this means that the markets are particularly susceptible to any bad news we might get. And it's a little bit tough to see on this chart, but to give you some comparison, at the end of 2022, when I made my stock market bottom call, 44.5% of investors were bearish. We're down to 14.5%, which I think is actually still high. I think even less than 14.5% of investors are bearish right now. And the last chart I'll throw at you is this one, which shows the amount of investors that expect a correction, which is also relatively low at 24.6% of investors. A quarter of investors right now think that we're due for a correction. But even at 24.6, that's relatively low. So what's the problem with this, you might be asking? Well, the problem is that there's nothing to fear except nothing to fear, if that makes sense. Where everybody seems to be invested in this market and everybody seems to be bullish, and a lot of people are chasing the micro strategies or the Nvidias, the stocks that have gone parabolic. And again, there's only a handful of companies like Nvidia that have gone parabolic, while the rest of the market that has been rallying has kind of started to move negative. So this rally has really narrowed, which is, again, typically a sign of a buying climax. So assuming that the vast majority of investors are bullish right now, and also assuming that they're mostly invested at this point, we're probably running out of bears that we could potentially flip into the bullish camp. People that are sitting on the sidelines with their cash. There's very few people like that. And again, when you reach that point, you're susceptible to bad news because the amount of capital that it can come into the stock market theoretically is much lower than the average amount that can come into the stock market if people are neutral on the markets. And this is the exact opposite of late 2022 when everybody was on the sidelines. And guess what? I don't know how many others are out there. I don't want to just say it's me, but I'm a good example because I'm making this video, right? So I'll talk about myself. People like me have benefited off of people jumping back into the markets. And I beat Wall Street back into the markets. If you follow my channel, that's something you'll notice. I don't care what other people say and what other people think and what other people say my holdings are valued as. If I think something's undervalued, I trust my own research and due diligence, and I trust my process. And that's how I've kicked the market's butt over the past few years. And hopefully that'll continue. I'm obviously young. I have a lot to learn. And as my dad says, when you think you have it all figured out, that's when the good Lord tells you have nothing figured out. So I remain humble knowing that I don't have all the answers. These are simply my thoughts and opinions. And, best case scenario at this point, in my personal opinion, in 2024, I think the SPX could hit 4,500 maybe. So I'll go back to Google quick. The SPX is at 5165. So let me just do the math quick on how much of a percent return I expect for the S&P 500 at this point. I see the S&P 500 returning us 6.5%, I'll round up, 6.5% this year, which is not terrible considering we're already up on the year. But this is much lower than most other Wall Street analysts have. Coming into this year, a lot of analysts on Wall Street were very bullish on the markets. And obviously, if we do get some sort of pullback, that'll increase the return I think we could see. But sitting at our current price in the SPX, I see us getting 6.5%. I'll say 6 to 6.5% return this year, which is going to lag 2023 by quite a bit. So I just think we're due for a correction, and maybe so far throughout March it's been the start of it. Again, I don't know. I don't have a crystal ball, but I just look at this and I see so many bulls and so few bears that I don't think we have enough bears left to really keep the bullish momentum going. There aren't very many people with their cash on the sidelines waiting to enter the markets. So because of that, I think we're susceptible to any bad news or some sort of sell the news event, which I think the Nvidia event next week could be that. I'm not saying it will be that. I think it's a potential, though. Just based on Nvidia's recent parabolic rise, a lot of growth, and honestly, the best news possible has been priced into Nvidia stock, which again signifies that we're probably at a buying climax for Nvidia in particular. Now, I might end up eating my own words and regretting I said that, but who really knows? These are just my thoughts and opinions. If you enjoyed this video, hit that like button for me. And again, if you're new here or returning and not yet subscribed, please subscribe down below. I greatly appreciate it. I'm incredibly blessed. My channel continues to grow super quickly, and I can't thank you guys enough for that. So thank you. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.